a little bit over on that. I am a big Tony fan, so from the Bay Area, so I had to let that play out, you guys. But good morning. My name is Michael Bardales. I am the director of mortgage for Radius Mortgage, and welcome to our Clear to Close series. The purpose of the Clear to Close series is just to bring up topics that have to do a lot with the realtor partnership with lenders, also education about new products and things of that nature. So today's conversation is definitely going to be a roundtable conversation. So for any of you guys that want to chime in, please just, speak if you want to. Don't want to make this a one-sided thing, but at the same time, if you're doing some work and want some good background noise, I think this is a great room to join. So let's get into it. Before we continue, I want to go over just a bit about this Dream for All shared appreciation loan. This is definitely the topic. Every time I scroll through my Instagram feed, every single person is talking about this. I just got a cool little YouTube, TikTok video from Lupe about down payment assistance. But I want to cover it real quick. It's going to be quick and easy. If you have questions right now about this, please let me know and we can go for it. So again, what it is a Dream for All conventional first mortgage. They can provide you up to 20% of the sales price or the appraised value. The income cannot exceed CalHFA income limits. Minimum CLTV is going to be 70%, and the max CLTV is going to be 105%. In regards to layering with other CalHFA programs, it cannot be combined with Cal Plus Zip or My Home either. So again, do you have any questions about this? This is just a quick highlight. Borrowers with income basically are 80 to 150% AMI using the Home Ready lookup tool. Less than or equal to the CalHFA income limits. So I have two links here. So what this is basically saying is that one, you have to fit this bubble, and the bubble is per county, and you can only be between 80 and 150%, and then at the same time fit the CalHFA income limits. Sorry about that, guys. I'm in Tahoe, so I have a bit of a delay. Give you an example of what that means. So Alameda County, the CalHFA income limit is $282,000. That means if you went to CalHFA and you use any other product but Dream Home, you can go up to $282,000. However, with income limits over here with the Fannie Mae Home Ready, you can only make between $120,000 and $181,320. Okay, so big difference there. Think of the mindset. If there's a lot of realtors in the room, like a BMR, right? To qualify your client for BMR, you have to fit a certain AMI limit or whatnot. So in regards, this is pretty much like the same thing here. So again, I was thinking about it yesterday. I was like, man, I think it's the first time in my life, and didn't do many products like this where we had to include something like this, right? Where you have to kind of put in the AMI in regards to this. And then look at LA. LA has 180,000, but the income limits there are 78,320 to 117,480. So again, this doesn't take into account debt. That doesn't take into account what the current client has right now in regards to that. So definitely, you have any questions about this, please let us know. Income limits to me is going to be the most important thing. Once you fit this bubble, then yeah, we can go on to the next steps. And what is the next steps? Basically, here's a graph showing exactly what it looks like. So for example, you get $100,000 and your first loan is $400,000 and the home value is going to be $500,000. Let's say 5 years later, right? The home value goes up to $640,000. The home appreciation obviously is going to be $140K. So what's going to happen is the homeowner's shared appreciation is going to be $112, and the DFPA appreciation is going to be $28,000. Okay. Don't forget, you still have to pay back that $100,000. So in regards to that, if you look at it, the DFA loan payback is $128,000. The homeowner equity is going to be $142,000, which then gives a first mortgage balance of $370,000. And then the home sold for $640,000. So again, quick and easy example. I know I went over it super fast, but I just wanted to talk a little bit about this. We have a lot of training about this. We can go into all the weeds in regards to this. Just give us a shout and we can go into it. So let's go into the fun stuff now, right? The realtor and the lender relationship. When I was thinking about this, like, it would be pretty cool to put a quote up here. And this is a quote that I found. One finger cannot lift a pebble. And it's a hobby proper. Hobby are Native Americans here in the Arizona region. And I thought this was a really good thing. And if you think about it, a pebble's so small, but yeah, you can't lift it with just one finger. You probably need a little bit of help with that. And that's the purpose of all this. So I want to kind of break down what a lender is, because there's a lot of people out there maybe don't understand the difference of lenders. I'm today specifically going to talk about California lenders because we're a California state. Every state has lending in different ways. But in regards to this is pretty similar. So the first NMLS license that anyone can get is going to be what's called your federal NMLS. So those are going to be your individuals that work at the big banks and credit unions. They only have to have a certain level of education because they're FDIC, right? A lot of this stuff is insured by them. So in regards to that, they cannot lend in any other capacity but working for a bank, an FDIC bank. So this is going to be your First Republic people. Well, First Republic is still around, sorry. Wells Fargo, Bank of America, your credit unions, things of that nature. So not knocking those people. I think those people are really great. Think of these people as more in-house people that get customers through membership and things of that nature. A lot of them probably don't have a lot of real estate experience or been involved with real estate experience. Their backgrounds are probably a lot in banking, which is very helpful in a lot of different things because they have financial tools, they have things of that nature. So anytime you see a Wells Fargo pre-approval or credit union pre-approval, just realize it's an NMLS federal, okay? The second one is going to be the NMLS Department of Financial Protection and Innovation. Now, these are going to be your direct lenders. So think of Guaranteed Rate, think of Fairway Mortgage, think of those individuals of that capacity. These can also be correspondents and brokers as well. So necessarily they may have warehouse lines. So think of people in the DFPI world. Majority of them are going to be correspondents and direct lenders that have what's called warehouse lines, right? Direct lenders basically have a full underwriting department, right? So they'll have underwriters, they'll have processors, and they will then go ahead and fund their own loan through the warehouse lines. From there, they sell it to Fannie Mae, to Freddie Mac, to whoever they want to, and they don't take typically on the servicing. Correspondents, the same way. The way correspondents work is that they will send the loan to, let's say, United Home Wholesale Mortgage. Their underwriters will underwrite the entire loan and will guarantee they buy it. So if you're a correspondent, you're more in charge of pricing, you're more in charge of all these type of things, so on and so forth. There's a small realm that are DFPI that are brokers, meaning they just pretty much just broker the loan out. And that's how they do that in regards to the DFPI. Now the DRE. Now these individuals here are people like myself. This is what Radius Mortgage is. We have both our real estate license and we have our lender license. A lot of us may be realtors, so we may be out there submitting deals, things of that nature. In my mind, I feel like this is the highest level of licensing you can get when it comes to lending, because that partnership there, you're going with somebody that actually knows real estate as well, right? So having a real estate license kind of put us on this even playing field with other realtors, and we can structure things. Sometimes you may hear lenders like, hey, that's not my thing, that's the realtor thing. Those are probably the NMLS Federal and NMLS DFPI people. In regards to the DRE people, we definitely have our license. We know what's going on with real estate. We probably are active in the market as well. So that's the cool thing about it. So if you have your DRE license right now, you can actually get your MLO NMLS license as well. So that's the difference with the lenders, okay? So I wanted to break that down a bit. Now let's talk about realtors, right? So there's two capacities of a real estate license. One is just being a typical real estate agent, right? What does that mean? That means I passed my test, but I am not a part of the Association of Realtors, okay? I don't need it because I'm an investor. I am a developer. I use my own forms, so on and so forth. So in regards to having your DRE license, you're not called a realtor, just to give you a heads up. You're only called a realtor in regards to paying dues to the California Association of Realtors and also to your local Association of Realtors. Now, there's three levels of being a realtor, right? They have what's called MLS only. So these individuals pay their dues and they have access just to the MLS and to car forms. So that means I can look online, I can do all that, but I don't have a super key. I can't show you property, but I can do that. Think of licensed assistants. So if you get licensed maybe in your first year, you partner with a great team, these individuals will send you out and just have you look up comps. That's the reason why you would have MLS only access. The second realm is majority of realtors out there. They have MLS access, they have super access, and they have access to all the car forms. Okay. So those individuals are pretty much 1099. They go out, they do business in that manner, and there are true realtors. Now, the other ones are going to be what's called your salary realtors, right? So think of Redfin, think of new construction, think of those individuals, right? Those individuals get paid more on bonuses. So if I close X amount of deals, I don't get the full commission. I may get a salary and a bonus. Those individuals right there pretty much know a lot about new construction, new home sales, things like that. So that's right here is, again, the recap of a lender, right? Three types of lenders in California: federal, DFPI, and DRE. And then there's two types of real estate people. One is going to be a real estate agent, and one's going to be a realtor. Just going to chime in here. If anyone has any questions, again, please make yourself a speaker, and I can definitely answer those questions there. Now that we know that, let's get into the fun stuff. Let's talk about the lender stigma. I'm going to talk about myself for a second. I got a soapbox here, so why not? I've been in real estate for 19 years. I started in 2004 as a loan officer. From a loan officer, I became a broker. From a broker, I managed a bank in San Francisco, Sterling Bank and Trust, where I did TIC loans. So I learned a lot about lending in the banking realm. When I came back, I went back into the DFPI realm. So for myself, I have every single license when there. It's weird my career went that way. And then in 2009, I switched over to be a realtor. So from 2009 to 2019, I became a realtor. So in there, I owned a franchise. I was a broker. I did all that fun stuff in the real estate world. Go back 2 years ago, I went now back into the lending world. I'm a lender. So what I did, and I will always do, and what I always recommend to every single person, keep your license active. Get your lender license. DRE people, get your lender license. I highly, highly suggest that. You never know when an opportunity can come where that license may come in handy. It's not hard, you guys. It just requires a high school diploma education. So as long as you have that and you have a calculator, you can get your license. And becoming a good lender, come join Radius Mortgage and we'll show you that. But when I came back into the lending world, there's this stigma with lenders, right? Like what realtors think of lenders. And I had that same stigma when I was on the real estate side. Like, oh my God, here comes these lenders, right? They always want me to work with them. They always want me to come to their lunch and learns, and they want to give me Starbucks gift cards and all that good stuff, right? But what is the stigma of lenders, right? And the first thing is, I hear all the time, no proper follow-up. What does that mean? That means the realtor says, okay, I'll work with you, lender. Here's a bunch of leads. Give these leads a call. Let me know what's going on. Hey, lender, here's my sister. Give them a call. What's going on? Lender gets super excited. They may call, and then all of a sudden it falls off. Then all of a sudden, 10 days later, the realtor's like, hey, what happened to all these people that I gave to you? The lender's like, oh, I forgot to call them, so on and so forth. So to me, that's been one of the stigmas. And also, just to be honest with you, one of my self here, I've been a victim of this a few times as well. So in regards to that, it just goes back to something simple. Don't take on more than you can chew, right? But that's the lender stigma right now. And that's kind of like what I feel a lot of realtors feel about lenders. They don't proper follow up. The next thing I hear a lot is there's no proper communication, right? There's so many different phases, right? So when we get the lead, that's stage one. That's just a name, a phone number, and an email. There is an application process, there's a pre-qualification process, there is a pre-approval process, and there sure is a live escrow process. In those process, there's different things that are happening. There's things that are happening in the application stage, pre-approval stage, so on and so forth. At times, we don't get proper communication, but I want to tell you sometimes why. We are regulated on our side. At times, we can only give out so much information, right? We can't get into the details and the weeds of providing you guys their FICO score, letting you know how much money they make, things of that nature. That is up to the client. I know sometimes we kind of let you guys know that stuff and probably shouldn't, but typically that's probably why there's a stigma with the improper communication with realtors and lenders. They may be talking to the client all the time, and the client understands that. But I think us as lenders should also call and say, hey, in regards to the application, they just filled it out. We're going to run their credit. Hey, guess what? We ran their credit. They seem eligible. We're moving on to getting them pre-approved. Hey, they're pre-approved. This is what they're pre-approved with, so on and so forth. Hey, we're in a live escrow. In a live escrow, to me, there should be a lot of follow-up, right? Hey, your loan is registered. Hey, your loan is locked. Hey, we ordered your appraisal. so on and so forth. Every step of the way, lenders should be going out there and giving proper communication or whatnot. But that's what I've seen. And again, I've been a victim of all this. The other thing is no proper education, right? There's a lot of things after the mortgage, right? For us, it's after the mortgage. And one of them is supplemental tax, right? I always ask my realtors and say, hey, who wants to talk about supplemental tax? And the reason that needs to be brought up, I think this should be brought up prior to even searching for a house, right? Are you guys putting this in your buyer consultations? Are you guys having them understand that? Aislinn, who's one of our lenders, we had a client that was pre-approved and had the money, could close, but then also they were using all their funds to purchase this house. She said, hey, there's going to be a supplemental bill coming. It could be X, Y, and Z, and the client couldn't afford it. And without that knowledge, he probably would have been able to buy the house and then all of a sudden months later get this fat bill and then get into another problem and then even probably get mad at one of us. So I think properly educating our buyers in regards to supplemental tax should be top notch for all of our lenders. The next thing, when is my first mortgage payment, right? Like a lot of these are first time home buyers. They're going through this whole phase of saving money, doing all that stuff. But also, too, they need to know when are they going to pay their first mortgage as well. And also the qualification process. The one thing about us that I tend to see as lenders is that, we have to deliver the news sometimes not in a good way. So, for example, there may be somebody that has an 800 FICO score, has over $1 million in assets, and makes $300,000. But in regards to Fannie and Freddie, that $300,000 cannot be counted because that is side hustles, that is stock options, that is that manner, and the money we count is $60,000. So think about that. You go to somebody who makes $300,000 and you tell them that they only make $60K in the eyes of the lenders. They'll get pretty mad sometimes. And we have a lot of those conversations with a lot of our people, but I think it's about educating them, right? So to go back in the lender stigma, what I've learned is that, yeah, some of us don't have proper follow-up, right? Some of us don't have the proper communication as well to us, and some of us don't have proper education. If I'm going to kind of defend lenders right now, and again, we're going to talk about realtors, I'll defend you guys. I'm licensed in both, so I'm both as well. It's just making sure, again, like I said, we just educate the client all the time throughout the process. Even when the good, the bad, the ugly happens, we have to be that trusted official to really give them that information. Now let's talk to the realtor stigma, okay? I think this is kind of funny when I was thinking about this. Like, what is it about realtors that get the lenders upset? And what is it about the lenders that the realtors get upset? And the one I want to say is that sometimes you realtors don't stick to your pre-approval. All of a sudden, I send out a pre-approval for $450,000, and you guys bring me back an offer accepted at $500K, and then want me to work the magic. I think for us, and I think a lot of lenders out there do proper pre-approvals. If they're asking all the boxes, checking all the boxes, asking all the questions, you have to trust that pre-approval. If you're going to go above that pre-approval, please give us a call. If anything is going to change, I think what we do on the lending side, we try to maximize their pre-approval, but things change, right? Another thing that can change and that I would recommend is that if we pre-approve somebody at 5.25% at 500,000 and the rate shot up to 6%, that 500K is going to turn more into a 450 purchase price. So what I recommend is that every time you submit an offer, I don't care if it's a day, 2 days after you get that pre-approval, double check that your person is still qualified for that. As rates have been fluctuating, I've seen rates as high as 7.5% in this past year, but as low as 4.99%, right? So that's a 2% swing any day of the week. So make sure you check out with us before you submit that offer. The other thing I see is advertising lending products. And I laugh at that a little bit because with us, man, we can't do a lot of the advertising you guys do. Because we're licensed, any information we give has to be solid. If not, we can lose our license and our company can get fined, right? So RESPA, all these individuals could come to us and say, hey, you said no money down. And like, yeah, that's not for everyone. When we advertise, we have to be specific to how everyone can qualify, right? But I see a lot of realtors out there saying no money down. If you have bad credit, you can qualify. I think what we should be saying is if you meet these certain criteria, you can probably buy a house with no money down, right? So I think it's the language behind all that. Like with the Dream for All program, I've seen a lot of stuff out there. And like I said, I would just be careful. Maybe sometimes if you do want to talk about lending products, talk to a Grace, talk to a Lupe, talk to any loan officer that you're working with right now. Say, hey, I want to do this reel. I want to do this video. I want to do this. Can you double check that I'm saying the right things? Okay. Again, this is a partnership. So in regards to that, what I would say is, yes, talk about lending. Yes, do all that good stuff, but just make sure you validate that information with us to make sure that you're saying the right things. Because what happens is we now get your leads, right? Say, for example, you do that. You have a reel, it gets the 10,000 views, you get all these forms, and then you're sending it to us. We are now having conversations with your people about the opposite of what you just said. No, you don't have zero money down. No, I can't help your bad credit. And then it looks like we're not doing our job, right? So then they get disappointed, it discourages them, so on and so forth. So think about the end result. Definitely, I want you guys to get followers, get verified on Instagram, get all that fun stuff happening on TikTok, but just make sure it's verified, because what's the point of getting all these views and getting all these leads if we can't do anything for them, okay? The other one that I've noticed is that some of us get into contract without being pre-approved. So a lot of you guys out there are like solid negotiators, man, but nobody wants to pre-approve somebody during a live escrow. That is probably the hardest escrow to do. Emotions are high. People don't know what's going on. There's a lot of confusion. Most listing agents are assuming that this person is pre-approved. Most of these listing agents are assuming that we can meet these timelines. And the thing about it is, like, when we get into contract, it's go time. So these contingencies are 10 days. These contingencies are 14 days. If we don't have proper documentation, we have to get, a 1040 from the IRS. We have to get extra documentation. The client employer is not giving us the call back. That's what happens, right? So in the pre-approval stage, that's why we want someone to get pre-approved. Allow us then to verify the client. Allow us then to do all these different things, right? But creating this in an environment while there's a live escrow, oh my gosh, it can be chaotic. I've seen emotions fly all over the place in something like that. So again, please don't get into contract without getting pre-approved. So again, just to recap a little bit about the stigma, us lenders, we're not properly following up. You lenders out there that are on the call, make sure you do that, right? If a realtor is giving us a lead, if a realtor is giving us someone to call, give them a call back, shoot them a text message. Hey, I talked to Joe, so on and so forth. And more importantly, use your CRM, right? Every lender should have a CRM. Morning, the first thing you should be looking at is your CRM and seeing who needs to be followed up during the day. Make sure we communicate as well. When the application happens and things of that nature, make sure we're communicating. And also, more importantly, let's make sure we're educating our clients. If you got to change your buyer consultation slides, please do it, and just make sure you're properly educating. And your realtors, stick to the pre-approval. Advertise lending products, but make sure you verify it with us that your information out there is going out there correctly. And please, please do not get into contract without being properly pre-approved. We want to make you look good. We want to make the client look good. And also too, the listing agent, if you have another client and you have that listing agent has another house, they may look at you a lot differently the next time you submit an offer to them. So just make sure that we're doing all these things. Here are some of my lender and realtor tips, right? Like, the thing about it is, when we look at a contract, right? When we get into escrow, there are so many people involved, right? There's an escrow officer who has an escrow assistant, who then has a funding assistant and a doc draw assistant, right? And that's just title. Then there's 3 inspectors, roof, general, pests, so on and so forth. If you have a pool, probably a pool. That's already 8 people. Then there's the lender. The lender probably has a processor, has an underwriter, has a junior loan officer working with them. The realtor may have their TC, their buyer agent, their listing agent, so on and so forth. They could be anywhere between 10 to 20 people in one transaction. However, there's 2 people that lead it, right? It's the lender and it's the realtor. So the one thing I always hear, especially when I meet realtors for the first time, is like, I have a lender I work with, and it's like, awesome. But please know that, your network is your net worth, right? We need more individuals to grow our business. For me, I look at it in a mindset of like having business referrals, right? You should have 7 lenders on your team. You should have 7 CPAs on your team. You should have 7 tax accountants, 7 credit people, so on and so forth. Not for resources, but to make money.
right? This isn't about at times who has the lowest rate. It's about who you can make money with. I remember when I first came into real estate, and even my mindset now is, yes, I want to help a client. Yes, I want to help my culture and my community, but I want to make money. I mean, I literally came into this real estate game to make money. And for me, the way I grew my business and everything is through knowing more and more people. Don't look at us as a lender. Look at us as people, right? Like, hell, if you guys don't do business together, well, you might have a friend. I have a lot of realtor friends that, yeah, we don't do business together, but we hang out and we share ideas and we mastermind. We collaborate in such a different realm. But if you're just looking at a lender as being, hey, I'm not going to use you because I'm working with my guy Joe here, and Joe's a good friend of mine. You're saying no to building your network, right? If you're looking for more followers, you're looking to kind of get out there, you're going to need more people in your life, right? So we need more individuals to grow our business. So keep that mindset the next time a lender or a realtor or whoever else comes to you and say, hey, I want to work with you. Why not? Why not make money together, right? Second thing is reciprocal relationships. You know, like I myself try to lead with the hand, meaning before I ask you for business, I'm gonna do my best to give you business first, right? So business partners grow each other's income, right? Take a look back and let's see and analyze like of these lenders, of these realtors I'm working with, is it a reciprocal business, right? And that's what we have to look like. I love that, you know, some of us have worked with our brothers and sisters, and that's awesome. And familia, shout out to all that stuff. But also, too, take a step back and remember this is a business, too, right? Am I getting business? Am I growing my income with that, right? What if I do work with 5 different realtors and I give my true, business to Joe, who I've been working with for years, but I have 4 other lenders that are willing to co-market with me. One lender's willing to do open houses with me. One lender's willing to make phone calls with me. You have 5 different avenues of making business, right? Through a lending partnership. So think about it as a fishing boat. You have all these different rods out there and you're saying, cool, 6 lenders are working with me in different capacities. One's paying for my Zillow, one's helping me with open houses, one's doing this, one's doing that. And that's how you're really going to grow your business. But at the same time, us as lenders, we got to give back. We got to make sure we're giving the realtor some business as well and growing their incomes. The other thing I recommend is a monthly or weekly check-in. So if you do have this core team, you're like, I work with these individuals, meet monthly. Okay, what are we doing in the month of April, this month, to get X, Y, and Z deals? How many pre-approvals do we have going? How many leads do we have going? How many open houses do we have this year? And really analyze where you're getting your business from. A lot of us are busy, right? And we're busy, but sometimes we got to make sure our busy turns into money. I mean, that's the reason why we're here. Yes, again, help with the community, meet good people. But at the end of the day, you guys, I think every single person that's on this call is here to make money. So make sure you're checking in with your business partners, your realtor partners, your lender partners, and making sure you guys are growing each other's business. Make sure you guys are having monthly check-ins, and also realize that your network is your net worth. I thought of some books and kind of coming to a close. So again, if anyone wants to chime in, please let me know. We look like we have a good sized room here. But in regards to that, there's some relationship books out there. I think everybody knows this book, How to Win Friends and Influence People. Make the other person feel important and do it sincerely. This is probably one of the first books I ever read in my life. I read this book at 18 when I was in the military. And yes, sorry, that was the first time I ever read a book when I was 18. But we'll talk about that in another room. But this book was just mind blowing to me at that age. And to me, that's what it's all about. Partnerships are amazing. Like I just got the phone with the realtor. We're just talking for like a half hour, but the last 10 minutes is just us joking and just talking. And it's awesome to work with friends, right? People want to work with people they like, people they enjoy. So, a book like this can really help out. There's another book called The Light Switch. This is with Jack Schaefer and Marvin Carlins, both PhDs. This is about influencing, attracting, and winning people over. We have to realize sometimes, and I think us as lenders at times, we don't realize that we're still in the sales business, right? So in order for us to grow our business, we got to meet new people. We got to talk to new people. We got to get out there. So this book here is really powerful in regards to that. And the last book I recommend for relationships is The 4 Disciplines of Execution. This doesn't talk about relationships. It talks about execution. The reason I feel like this is important is because you want to work with someone that execute. And in order for us to work with someone that executes, we got to learn what execution is about, right? So this book right here, The 4 Disciplines of Execution, is a really solid book, and it's choose your wildly important goals. And if your important goal again is to lift that pebble, not one pebble can be lifted alone, right? So we're going to need partnerships in regards to that. So from there, you get more streamlined in regards to knowing what are you looking for a lender in executing? What are you looking for in your realtor to execute? What are you looking for in all that? The other day, I put in my IG stories like, just don't work, execute, right? Because if we're not executing, then we're just working, and executing actually means more money. So when we execute, we'll make more money, we'll meet more friends, and we'll grow our network. And that's really it that I had for you guys. Again, it was just a quick and easy presentation. I could definitely go into the weeds of this, but would love to chime in right now, maybe hear some feedback from people. Aislinn wants to be a speaker. Darren wants to be a speaker. Anyone else want to be a speaker? Come on in. We'd love to hear that. How you doing, Aislinn?
Hey, quick question. Sorry. So, are Radius agents also able to do the NMLS side?
Are Radius agents?
I'm sorry, realtors. Are realtors able to also do the lending side too if they get the NMLS?
There are companies that allow it and companies that don't allow it. It is 100% able. Department of Real Estate is able to do that. So there's companies that do allow it. In this case, Radius Mortgage at the moment is just allowing people to join us to just focus on lending. However, if you're a broker, you can definitely work with us here on the lending side and still do brokerage on the real estate side at another company.
Okay. And then I just wanted to say on my pre-approvals in particular, I always put on the qualifying rate that I use to come up with the purchase price because, yeah, I think it's a little bit of a built-in protection and there's no surprises so that if I come back and say, hey, the rate's higher than what I qualified you, they're more understanding of why the purchase price can't be what it is on the piece of paper.
Yeah, I like that too. And like, I think you're really well at that because I've seen you obviously sometimes even go a little bit higher, right? So even though you're doing 5.5, you probably qualify them on 6% just in case something happens.
Do. Yeah, I do. And I always prep my clients. I always say, this rate might seem a little high, but I'd rather do this than have you get disappointed because then at this point, let's say I qualified you at 600,000 at 6%. Give me a call in case you need to beat out someone's offer and offer higher than what I put on there. Let me see if you still qualify with the ratios. And then, they have that capability. But I always like to give wiggle room because, as you say, rates can swing so often that it's always better to prep them for the worst and the higher payment and have them be comfortable with that and then surprise them with, like, for instance, I did 6.125 and I locked them at 5.5. So they're super duper happy, versus the other way where I'm making you think you're 5.5 and we come back at 6.125 and you can't get the house.
Yeah, that's really smart to do, and that's such a delicate conversation too, because sometimes people rate shop us, right? And we're like, why are you 6.125 when rates today are 5.5? But if you explain them for qualification reasons, right? Like I'm not. Yes, we can get you 5.5, but we want to qualify you at this. So when that happens, if it swings up, we're prepared, right? Preventive maintenance is what we're doing with our clients. And then also too, based on like that supplemental tax thing, I think it's crucial for us to talk about, right? That's gonna, like, if someone uses all their money, my closing costs, my gift fund, so on and so forth, and then that supplemental tax bill comes, they could be in some bad situation, right?
Well, that was where I was really shocked because, as you know, that person came to us like during a live escrow, surprisingly, and they had already shopped multiple lenders. Not one person in that entire time talked to them about supplemental taxes. So I was just really surprised. And so I told him, like, hey, he barely had enough for closing costs. And I was like, has anyone spoken to you about supplemental taxes? What is that? I don't know what you're talking about. So I sent him, like a little link explaining how it is and how I told him, I was like, I know as much as you want to buy this house and technically you can qualify, it's going to be really tough to hold on to the house once this bill comes and your other expenses comes because, like utilities and everything come up. There's so many outside expenses that you need to think about after you buy the house. And if you're literally using almost every dollar you have to get the house in the first place, it's not the best situation. And we don't want to put our clients in that position where we don't watch out. I know everyone's trying to, close a loan. Sometimes I get kind of nervous about that. Like, oh my gosh, you don't want to kill the deal. But our jobs, I think, as lenders is to show them like the facts. And if they are still like, you know what, I can make it, I can use every last dollar, but mom and dad or cousins or whatever can help me pay off the other stuff when it comes, then cool. But at least we were upfront and we were honest and like gave them the info that they might not have known about.
Yeah, good job on doing both those things. It's really vital to make sure. Darren, I see you wanted to speak. Love to hear some nuggets from you.
Yeah, hey, so I was just going to chime in about a book that I found really helpful. It's called Fanatical Prospecting by Jeb Blount, and it's just kind of like a good technical book about structuring a plan on calling and leaving voicemails and text messages and emails, and kind of getting in the mindset of being a fanatical prospector. And it's just been a book that's kind of stuck with me and kind of helped me, through the craziness of the market. And so I was just kind of a chime in kind of thing.
Yeah, I love that, man. I mean, books are huge. I'm a big Audible guy. It's amazing that what you can learn from a book, man. I tell you that it's just lost art at times, where people go to spend thousands of dollars on coaching and show up every morning at 8 o'clock for all these different things. But I think to me is really, really good. But pick up a book, like go to a library and you'll be amazed on what you can learn from something like that. And, for me, that's been a lot of my education. I went to high school, straight to the military, so all of my training sessions or whatnot. But to me, the most valuable things that I've learned in the last couple of years is from a book. And because it allows you to kind of be in your own mind, right? Usually when you're coaching and you're in that platform, you have someone telling you something, you have other people kind of hyping it up, and then you go back and you're kind of like, what was all that? But at times when you're alone and just reading the book, you're able to be in your own mind. You can study it. You can be about it. So I recommend, these books are really, really cool. So that's really what I want to talk about with you guys today, was just about partnerships. Again, look at partnerships as opportunities to make more money. The next time you hear a realtor, the next time you hear a lender say to you, hey, I would like to work with you. One, thank you. Man, that's awesome. You want to work with me? Great. Second question is like, what can we do to add value to our relationship? Like, how can we make more money together, right? What are you doing? Closing 2 deals a month? How can I get you to 3? That should be our conversation to any partners that we have, regardless if we're a realtor or we're a lender, right? We can leverage one another in that mindset. Again, I told you before I was in the military, I was on a ship of 5,000. There's a lot of things we couldn't do with a lot of people around me. So for me, collaboration is essential to success. It's essential to getting to that next level. So I recommend whatever you guys can do, just get with that and look at it differently, right? Like, you already know the stigmas of each other. We already know what a realtor does that gets us annoyed and what a lender does that gets realtors annoyed. But at the same time, you find that great partnership, man. You're gonna do some great business together. So like to leave the floor open one more time if anyone wants to chime in. If not, you guys enjoy your weekend. I am on vacation starting after this call. So you guys stay beautiful, stay blessed, take care. Peace, love, and real estate. I'll see you guys in the next room.